Because all these central banks, they're saying, for an extended period of time that we're going to be maintaining our restrictive policy. But considering, I suppose, the economic situation in the UK in particular, is that going to be a promise he's going to be able to keep?
I think for the near term, at least the 3 to 6 months period, there's still some case for high interest rates to be on hold, especially when the fact that inflation continues to be relatively high. So that is also a persistent feature in the UK as well. However, I think as you correctly pointed out, fundamentals there are really softening and much more compared to the Eurozone as well as in the US. So beyond the 6 months period, I think markets are already starting to price in possibility of a rate cut. So perhaps even faster than the other G10 peers. So I think that may also weigh on the cable going forward.
And that's the thing I wanted to ask about, because you talk about the macroeconomic picture there, and all of these central banks, because they're looking to be data dependent. But if you think about the velocity with which all of these rates were hiked, and especially in a far more rate sensitive environment like the UK vis-a-vis, I'd put the UK maybe here, the EU here, and then the US here in terms of that rate sensitivity, don't they run the risk of the longer you keep it there waiting or chasing the numbers to start to turn your way, you're still going to have the lag of the higher rates continuing to play through all the way down, and the risk you run is far greater for any kind of catastrophe?
I think there's always that kind of risk, because the laggard impact of monetary policy will likely continue, and even if there's some rate cuts, we are still at a level where interest rates are high and then at a restrictive level as well. So I think definitely there's some consideration towards that, and I think central banks, as they look towards the next move, perhaps moving towards 2024, 2025, any potential rate cuts, they also have to be mindful of the impact of the previous tightening, and also the impact of move towards the more neutral rate in order to ensure that the economy doesn't go into a harder landing, while making sure that inflation doesn't flare up once more again.